Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS. At the beginning of each year, I like to ask, how did the FX experts perform last year? I'm going to look at the market consensus forecast for currencies at the beginning of 2016 to see what value, if any, the FX forecasting community added to our sum of worldly knowledge last year. The answer is actually pretty good. The pundits did fairly well in forecasting the dollar in 2016. Other currencies, though, not so well. The simplest way to measure the performance is just to look at the direction. Did the currency go up or down against the dollar as was forecast? In 2015, the market consensus got the direction right only 55% of the time. That's not much better than a coin toss. This year, though, the pundit community did pretty well. They got 20 out of 31 currencies right, or 65%. And, even better, the forecasts were pretty accurate too. The median forecast was only 3.4% off the actual turnout. The average forecast was higher at 6.2% because of a few massive outliers. Now, the graph here shows the forecasts on the y-axis and the actual returns on the x-axis. A correct forecast would lie on the yellow line. A currency above the line did worse than expected. One below the line did better. So, what were the big outliers? Several of them had to do with political surprises. The pound was forecast to rise, but as we all know, it plunged because of Brexit. Same with the Mexican peso, which plummeted because of Donald Trump's unexpected victory. And the Turkish lira weakened far more than forecast following the coup in Turkey, the attempted coup in Turkey. On the other hand, a number of the commodity currencies performed unexpectedly well. The Brazilian real was forecast to fall, but in the event, it was the best performing major currency, up 22%. The experts were bullish on the Russian ruble, but not bullish enough. The South African rand also did better than expected. The New Zealand dollar was forecast to decline, but the turnaround in milk prices at the end of the year resulted in a gain. Among the G10, the yen was forecast to decline a little bit, but wound up rising slightly. Not that big a difference, but at least getting the direction right is important in such a key currency. On the other hand, the euro forecast was spot on. It was forecast to fall 1.5%, and in the event it fell 3.2%. Not bad. But before you start believing what everyone on the TV says, note that these are only forecasts against the dollar. The market expected the dollar to be up and got it right, basically. But what about all the other cross-currency forecasts embedded in these forecasts? We can get an idea of how well the pundits did outside of the dollar by looking at the forecast against the euro. Here, the record is actually pretty bad. The experts only got the direction right 11 out of 31 times, or 36%. That's far worse than tossing a coin. I do this exercise annually for two reasons. One, I think it's valuable to look at how the experts did to remind us not to believe uncritically everything we hear and read. Yes, some very smart people do spend a lot of time thinking about currencies, and it's worth hearing what they have to say. But just because they're knowledgeable doesn't mean they're right. Unexpected events can and do occur, or sometimes things just don't go as expected. And just because events seem to flow logically in retrospect doesn't mean that they can be forecast in advance. This shouldn't get us discouraged, though. The second reason I do this is to demonstrate that the small investor actually does have a fighting chance against the experts. The experts can and do get it wrong too. Nobody has a monopoly on wisdom. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Turn your trading ideas into action with FXPRIMUS, the safest place to trade.